Hi, I'm Dustin Klein with Smart Business. We're here with Patrick Lo, Chairman, CEO, and co-founder of NETGEAR. Patrick, one of the things we talked about is really targeting inventory control as an effective method of cash flow management.
Right.
What led you in that direction?
Well, unfortunately, it was based on experience. Yeah. So we actually went through the first recession of our company history back in 2001, right after September 11. And it was painful. I mean, we're flooded with inventories. We got to write down a lot of inventory, burn a lot of cash, just like everybody else in Silicon Valley at that time, Cisco included. So we learned a bad lesson. And that's why this time around, we're smarter.
Well, how did you approach it this time around?
Well, first and foremost, that we did not wait. All right. So last time we said, let's wait a few more months, see what's going on. So this time we didn't. When we saw the downturn, we immediately said, let's do it. So we actually really clamped down on inventory within 3 months time frame. And when you clamp down on the inventory, all that turns back into cash. Mm-hmm. So luckily, we did not have any leverage, so we never borrowed any money. So that's very, very good. So this time, it took us 3 months to really, clamp down on the inventory.
What kind of results did you have from that? You said you turned it into cash.
Yeah, we basically created about $30 million plus of cash by clamping down on the inventory. So we certainly increased the turns of the inventory, which really helped our bottom line as well. Because in our industry, the inventory is based on a lot of technology, semiconductors, which come down in price really fast. So if your inventory turn goes up, actually your cost of the inventory comes down. So that benefits the margin as well. So during this time of economic downturn where there's price pressure in the market, is a welcoming move that your costs also come down as well.
Interesting. It seems to me you talk about your industry with relationships. Mm-hmm. You're obviously talking to your vendors, your customers, suppliers on a regular basis. How do you build and foster key relationships with those people?
Yeah, the most important thing for any relationship, be it on the customer side or on the supplier side, is long-term. It has to be a long-term relationship. So from day one, we say we're not here just for 2 days, 3 days, a year or two. We would like to build a long-term relationship with you for years. And frankly, the fundamental basis of long-term relationship is got to be a win-win, or it cannot be a win-lose situation. So we make it very clear that we're here to help our customers to be very profitable, help our customers to grow. At the same time, we would love the customers to appreciate that. We would like to have reciprocity as well. So I think that has worked well for us around the world.
As the CEO, how much of your time is spent working on those key relationships?
Oh, clearly, I would say right now, my time is split probably, I would say 25, 25, 25, 25. 25% with customers primarily, going out to see them. And then, surprisingly, 25% with the suppliers as well. Suppliers from around the world, both from semiconductor manufacturing, logistics. And then certainly 25% is with my executive teams really strategizing the strategy and how do we do it and tactically on a quarterly, yearly basis. And then the other 25% is split between really going around and work with the employees, listen to them, talk to them, as well as to talk to the investors.
When you're talking to your vendors and customers, that 25% at the front end, what questions do you ask them?
Well, certainly with the customers as well with the vendors, it's the same question again and again. How can we work with you better so that we would be able to help you to grow your profitability and your revenue? It doesn't really matter whether it's customers or vendor, it's the same thing.
And on the employees, when you're talking to your staff to find out what's going on with them, do you have key questions that you're going to ask them for information you want to elicit?
Yes, all the time. The first questions that I ask all the employees, I make it a point that I at least will meet every single one of our employees once a year, at least once. So sometimes on one-on-one, sometimes in group. But always the first question is, how can NETGEAR do to make your life better? That's the first question. Yeah.
Excellent. I was reading through some of your quarterly reports and the annuals and your investor conference calls. And I see that you've done a lot with forecasting. And what I'm interested in is, what are some of the mechanisms that you've traditionally relied upon for forecasting in the past?
Well, traditionally, you look at historical demand trend, and then you basically, add a little fudge factor and assume is the future. I mean, that's basically the traditional method that we do.
And then how has that changed?
Well, certainly in this time, that all out the window. Because as you can see, probably 4 quarters ago, you saw the downturn was so severe that all the historical data did not apply. Even we applied the previous recession historical data, it just did not apply. Because last time it was US only. This time it's worldwide. Right. So that is out the door. And the same is true on the uptick this time around. Last time was really rapid on the uptick, but certainly this time the market demand uptick is not like a V. So I think historical data has its merit and also has its demerits.
Is there a shorter time frame then that you're looking for indicators to be able to do the shorter term forecasting you're using?
No, unfortunately, most of the manufacturing is now done in Asia, and the supply chain is getting longer. I mean, so it's impossible that you could do a shorter forecast cycle, because from manufacturing to shipment to get to the warehouse, get to the retail shelves, is very long. I mean, today, if you're using boat, to transport, is 6 months. If you use airplanes, then it's about 4.5 months, and so it's still a very long forecast cycle.
Interesting. You guys have branched out into a lot of different related markets with products and services that continue to complement what NETGEAR's core product was. How do you as CEO analyze those opportunities that are presented to you, but yet stay committed to your core strengths, keeping everything around that core?
I think it's very important is that from day one, we established a vision, what it is, and then what's our mission against that. And then we stayed true to it. Our vision from day one is that we believe that everyone is going to be connected to the high-speed broadband internet. And then that high-speed broadband internet coming into your house is going to replace all other pipes. So the end vision is your refrigerators, your thermometers, your TVs, your radio, everything is connected to the internet. So that's the vision. And then our mission is to enable that to happen at the easiest way and the most cost-effective way for our customers. So we stay true to that, and then we just see the opportunities unfold one after another, and then we go after it.
Interesting. And I'm sure opportunities come your way that aren't the right fit. Is it difficult to let those opportunities pass by?
Oh, absolutely. The opportunities come all the time, and as our team always understand that opportunities is boundless. Resources are always limited. So we always have to prioritize. And how do we prioritize is that, do we believe we can add the most value to this opportunity versus our competition? If we do not believe we can add the most value versus our competition, we say, oh, let our competitors do that, because we will not be able to serve our customers better than them. So that's how we prioritize.
Interesting.